liquidity, the outcome is incredibly large. If there's a big surprise when there's very thick liquidity, of course, and assuming the liquidity holds, the outcome isn't as dramatic, is it? But when the liquidity is very thin, like coming in from a US session that didn't exist, basically, there's no volume from yesterday's US session, of course, and you've basically went for in real terms about 24 hours without any volume at all, we can start to recognize that when the market trips, there's nothing supporting this market, is it? There's no market makers, there's no dealers on equities picking up business because they haven't got any business to pick up. There's no particularly big requirements to balance books or anything like that. So if it starts tripping, the only people that are in those trades are going to be hedgers. And if it's a hedger that's going to be in those trades, as soon as it trips 47 handle, it brings in selling. Well, of course, what happens next is we then go to 46.90 and it brings in selling. And then 80 and then 75. The next big one is 75 and it brings in selling. And then 70 and then 60. The next big one, 60, and you can see that that's another buy side, sell side level around the 60, and it brings in selling. And then it goes to the next big one, and that's going to be the 50. And what happens at 50? It brings in heavy selling. And that opens the door to the next one, which takes us down to 40, more selling. The next big one's going to be the 25, and obviously at 25, more selling, buy side, sell side level at 25s. And that opens the door to the 10s. What happens? More selling, and that gets us all the way down to the big wholesale price of 46. Now you might be saying, but why does it ever stop? Why does it not just keep tripping one with another, with another, with another? Why does it just suddenly stop? Why do we get that in effect? Why is that happening? We've got to remember that the freshest options are obviously in the day session, because we all know that in terms of strike prices, we can already recognize that the volume in terms of, there we go, there's that stupid, doesn't matter, I'm not going to change it. So we can already recognize that in terms of strike prices, the further you go, ultimately the less volume there is in the options markets. Now sometimes you could pick up a very, very old series of long-term options that suddenly become very valuable, and that's something you have to watch. But they're always going to be based around the zeros. They're always going to be based around the zeros and the 50s. So as you drop the price through these areas here, you can obviously start seeing that the volume will probably start dropping out, and because the volume starts dropping out, the hedge requirement starts dropping, and therefore the selling ends up actually not really having as much impact. So therefore the hedge selling doesn't have as much impact, and obviously the guys that were short the equity markets, the guys that were long volatility from the day before, all these guys, they're now recognizing the drop-off in volumes in terms of this volume curve here, in terms of volatility, in terms of the volume curve, in terms of the hedging. They're now recognizing that drop-off in volumes in terms of hedge volumes, and they start buying against those last little bits of business, and obviously into a key level like another wholesale price level, 46 handle, they start saying, right, let's take the market bid at this stage, and that's exactly what they did. It's exactly what they did. And obviously the prices stopped before the 46 handle, the prices bounced off that level, and we've seen a very, very dramatic move. You know, it doesn't look like a dramatic move, but guys, it went from 46 handle to 46.30. That's a $1,500 buy-side bounce. $1,500 buy-side bounce. And that's obviously quite significant. That's a very, very big move to the upside. Now, obviously, when you start thinking about this as a process, when you start considering these elements in this, we have been warning about, you know, potential problems in equities going forward. Obviously, the day's holidays are a very, very significant day holiday for the US. You've got 24 hours out of the cycle, basically. And when you start thinking about these ideas, you start looking into the idea of why and how and where and when and all that kind of stuff, things start to tie in. I mean, when we had a look at the inflation break-evens curve this morning, and the inflation break-evens curve wasn't just bullish bonds, it was very bullish bonds. It was one of those unique situations that doesn't happen very often. We did a whole class this morning on inflation break-evens, didn't we? And what that class showed, again, was that the bond buy from last night was very, very clear. But it wasn't just the fact that a bond buy was very clear. What does that mean? There's some sort of problem brewing, right? Now, what the hell is the problem? The problem's out there in the ether, isn't it? You might be thinking, nobody knows what the problem is. Yeah, but people are starting to sense in different markets that there's something brewing. They haven't tied it all together yet because oil hasn't fallen, equities haven't fallen, the bond price hasn't risen. But in the world of the bond space, which makes the bond market unique to pretty much every other market, positioning is changing. Now, obviously, we can say that positioning is changing on something like equities as well. We can simply start looking at what Warren's doing or what the quality spreads are doing. And the interesting thing about the quality spreads, of course, as you probably already know, is that the quality spreads have been negative equities for a long time, and they've been, I mean, so it's not exactly a knee-jerk reaction to something. The quality spread went very negative equities on the 11th of November, and it continued to be very negative equities ever since that into the top edges that we've been seeing over the last few days. We'll cover that obviously in classroom this afternoon. Anyway, so that's what you guys are walking into today. You've missed out if you haven't traded last night, guys. We did a classroom if you weren't in, and this was quite remarkable. If when Kim comes in, you'll be able to, she'll probably be able to show you exactly what we were talking about and confirm exactly what we were talking about. But we did a classroom last night, and you know, and it was about the short oil trade. And we talked about this idea of short-term oil. We talked about this toxic supply. This was written in last night in the classroom. The guys that were in last night will be able to confirm that we actually talked about this toxic supply. We talked about this no demand into this area here. That's not demand, but it creates a vacuum. You might remember the conversation, in fact, if you'd been in yesterday. You might be able to remember that I was talking about, I was very excited, I think might have even have been the words that I used. Yes, was that the words I used? Perhaps. Very excited about the short oil trade. May well have been my very words. There's nowhere else in the retail space ever that would have been able to be that excited. Nowhere else in the world of retail space trading would anybody have been looking at this and going, yes, 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 except for you guys. Because you guys know how to work this. You guys know how it works. So obviously what happened in the overnight session was we got this enormous sell-off on oil in line with the supply that's visible, in line with the euro dollar that's visible. And, you know, from a high print of $79, we got down to a low print of $73 for $6,500 odd thousand profit per contract from last night's classroom. You couldn't really make it up, could you? It's one of the best recordings Kim's possibly got on record for a live trade that then evolved into an outcome the following day. There's probably nothing like it in the retail space that 24 hours later oil prices happen to be $6,500 lower the very next day, and you go, well, there's what we were talking about. But what I was saying to the guys this morning isn't like the idea of look at me, look at what we called. The idea is that you guys have the ability to look at this and say, yes, I would have been doing, and I have been doing the same thing. I've been selling into that high price because I can see the vacuum opportunity where there's no demand coming in here. That's not a demand vacuum. It's a manipulation. There is no buyers in this area of oil. Now, there might be buyers here, but we can watch for that when it hits. When it hits that price, the supply line is collapsing, so there's no way I'm going to start buying into oil at that stage. And obviously the takeaway from that short oil trade that we talked about yesterday off the supply line is enormous. That's us made our Christmas bonus, and it's not even December. One day, and you're finished for the whole of December. You can take the whole of December off now and say, thank you very much. That'll do. That'll do. That'll do donkey. And obviously when you look at that trade there, guys, I think we did, and this is not a word of a lie, I think we did a somewhere in the order of $8 million profit as a bank on that short trade. I think we did about $8 million. One trade, 24 hours later, $8 million. So you can see it. Well, it wasn't that difficult, Paul, because the day traders were holding the price up because of this bid in this session here, because in the day trade sense, a lot of oil buyers are going to buy the lows because of the euro-dollar rally here. So there's going to be people buying into that euro-dollar rally. The manipulation was all strategic oil reserve chatter, remember? And I said to you guys, I said, stay away from oil. Remember, we'd started to sell oil in here. We got a very, very good response. That arrow there wasn't a buy trade for me, by the way. It was just a trade it was something we were pointing to yesterday. That wasn't a buy trade there, so I can get rid of that. So I wasn't. Don't let me not make you into a position that we weren't buying into this. But equally, I was looking at the possibility of selling. I think I'd taken one or two sells in here, and I think I'd made like 10 ticks and a scratch and so on. But then I remember quite clearly tweeting all the chatter about the strategic oil reserve releases across India and China and America and Europe and Britain was starting to cause oil prices to go a little bit nuts, a little bit weird for a while. And as a result, we had to just let it be. You might recall the conversation. And once it settled down, we were then able to take stock of where we were. We were able to then read the market for a second time, a new opportunity, and recognize that we've not only got a good oil trade, we had a good oil trade over here. I mean, seriously, we had a good oil trade when I was selling heavy into this high price here. And that was a good oil trade. It went for $1,000. So we had a great oil trade here, but this little small adjustment in the supply-demand line allows us to just make a measure to the upside and take advantage of what looks like a crazy good opportunity. Not just a good opportunity, one of the best opportunities this year to sell oil. But this fitted into another situation. This fitted into a situation with bond break-evens. So this sell is incredible. So you can already now recognize the very big outcomes that you can get from these little classrooms. So welcome in, as I said, guys. Let's get through what we have seen so far this morning in terms of numbers. Kim seems to have maybe struggled in now, so she's probably yeah, you might not hear much from her today, guys. As I said to anybody else in the European session, she might be a little bit sensitive to loud noises, so she better wake it up. So you know, she's obviously got that red wine hangover, that type of concept. You know, it's always one of the worst. So welcome in anybody from the US session. I hope you've all survived in good fettle. So let's get through the numbers this morning. In the overnight session, we actually had good numbers. We started out the overnight session with the Australian retail sales coming in at 4.9%. The prior was 1.3%. So Aussie retail sales starting to pick up. But remember, Aussie had been in a very, very strict lockdown. So again, your baseline is having to be factored into that as well, that underlying lockdown narrative. It's not as if Aussie has suddenly started to find a lot of buyers. It's more the fact that there's more places that was starting in the last month or so was starting to open back up again. Moving forward, German import prices, which is part of the inflation makeup, is 3.8% against a 1.3 prior. GDP numbers in Switzerland came out better than expected, slightly down on prior. The money supply in the Eurozone was up to 7.7%. Lots of money supply kicking around there, so that's obviously 7.7%. The forecast was 7.4%. And finally, the private loans at 4.1%, slightly better than expected at 4%, but not exactly market moving, never has been. And that's us. Nothing from the US this afternoon in terms of the high frequency data, of course. Nothing this afternoon in terms of that. But obviously, as you move forward, the Treasury report on currencies. It's got a red indicator on your Forex Factory and your Econo Days or whatever news report source you're looking at. It doesn't generally have a massive impact on the markets because usually these things are already priced in. It gives an idea of you know, some of the things that they might be looking at. And as I said, it's a lot of the times it's just a non-event, so it might show as a red. You might be dead excited about it, but an awful lot of the times it has absolutely no real impact. Sometimes it has a big impact because nobody's expecting it to have any impact. So when they do say something that's a little bit out of line with market sentiment, for example, then perhaps but you're not going to be able to do anything about it. It's not something that you can do much about, guys. So welcome in, welcome in. We obviously had the football on. You might have been able to catch some football. I don't know if Kim had the football on last night, and you know, that might have been something that you guys were watching. I hope so. It's one of the traditions, obviously, of the Thanksgiving. The Cowboys, unfortunately for Kim, had a bit of a bad outcome, 33-36 going down to the Raiders, so that's not exactly ideal. The Bills, a big win against the Saints, a very big win for the Bills against the Saints. The Bears struggling to overcome the Lions, which was obviously quite an interesting outcome for two of the worst offenses on the planet, perhaps, would be reasonable. But the Bills, yeah, Josh Allen looking quite fiery, 23 out of 28 for 260 yards, 4 touchdown passes, but just 2 interceptions. And obviously they have a bit of a love-hate relationship, the Bills, at the moment. They could be superb at times, but they can also be sometimes very, very poor, but certainly a very good defensive display by the Bills. From my point of view, yes, another tournament win last night. I thought I was on my way out. I was third in the chip lead, and I was looking in danger of getting swallowed up by the big blind, but I managed to pull a couple of outrageous wins on the bounce. I started to put some weight into my cards, and it's the one thing I'm good at is when it gets down into the lower numbers and it's a head-to-head and I can start working out the probabilities, it starts to really work in my favour. So I started to throw some real cash around and I started to become the bully on the table. And that was them. They were gone. They were busted. So started to get into chip lead, and then it was just a matter of time, wasn't it? It was just a matter of time from the probability standpoint that I was going to be able to pull a big win out of the bag. So that was so 3 tournament wins out of 4, and a second place at the moment puts me well ahead of the year's league table with just obviously 4 odd weeks left of tournament play. 4 weeks left of tournament play. So yeah, all good. All good. It varies, Phil, because it depends who's playing. So you know, we get people coming in from America. We get people coming in from Malta, from Europe, online to play. So we can actually do that. But obviously the Americans never showed up because they were all pissed, basically. So that was fair enough. And so it was less players, but we can have as many as you know, we can have as many as like into the tournament itself. We're going to have up to 12, but we obviously whittle it down as the game progresses. But on average, it's a normal. The tournament's usually going to be between you know, about 8 of us or thereabouts is a normal one. So you know, we play as a group, and you know, well, not always. It depends if we've got any international players, Phil. If we don't have any international players joining us that night, we'll play with the chips and the cards. But if we've got international players, of course, we have to do the online version of it, so we'll play online. There's always something romantic about, I feel, about having the cards and the chips, but that's just a personal opinion if I prefer that. But anyway. So welcome in, guys. I hope you're all good. We've had an enormous day today. Unfortunately for you guys, you're probably waking up to seeing how enormous the day has become. You can obviously see in the background how enormous the day has been for the oil sellers. We'll obviously be touching on the inflation break-evens from the bond market as well this afternoon. I did go through it a little bit this morning, so we'll have to cover that again because we weren't quite making the progress on the answers that I was hoping to make. So we'll go back over that again this afternoon. So welcome in, guys. I hope you're all good. I hope you had a lovely time, Kim. Did you enjoy yourself? If you're on the mic, I don't know if you're traveling or not, but I think you said you were at home.
Yep, we're at home. No, had a nice day. Had a nice day. We don't do our dinner till tomorrow evening, but had a really fun day anyway with the girls.
So are the guests all at yours now, or
Lots
have
of
you
fun.
got like a house full of people living out in the?
Yes,
So you've got people on the settee,
house
you've got
full.
people out in the trailer,
House
and
full.
you've got people in the caravan out the back, and you've got couple of wigwams in the background or stuff like that. Is that what's happening?
Exactly. House full. Benny's here in my office.
Hi, Benny. How you doing?
She's
Oh,
sleeping.
she's been on the wine as well, has she?
She's sleeping still. Yes, absolutely.
Shocking. Shocking. Anyway, welcome in, guys. Welcome in. I'm going to grab a little bit of lunch. She was sleeping, yeah,